anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning, it's bright and early and you're watching Daybreak on Bloomberg Quint Live with me, Alex Matthew. First, let's look at the headlines. Asian stocks are off to a muted start despite a strong trading session on Wall Street. Facebook founder Mark Zuckerberg accepts responsibility for the data breach at the company and says that the social media giant is reviewing its tie-up with more than 10,000 applications. Manipal Health sweetens the offer for Fortis Healthcare's hospital business after some minority investors raised objections to the earlier deal. Bankers tell the Parliamentary Committee the RBI's new debt resolution framework is too stringent and seeks a longer rope before the resolution plan kicks in. Now let's turn to the international markets. Conciliatory statements from both the US President Donald Trump and Chinese President Xi Jinping led to US markets ending Tuesday's session on a high. The three benchmark indices gained between 1.7 and 2.1%. Abigail Doolittle summarizes all the action from Wall Street in this report.
Stocks finished sharply higher in Tuesday's Wall Street session, with the major averages, or the Dow, the S&P 500, and the Nasdaq, all climbing by 1.7% or more, with the tech-heavy Nasdaq really outperforming, finishing up by nearly 2.1% on the close. Now, part of that strong finish for the Nasdaq was Facebook, which climbed by about 4.5% for its best day since April of 2016. This after CEO Mark Zuckerberg kicked off 2 days of congressional testimony to address the Cambridge Analytica data crisis, among other issues. Investors appeared relieved by Mr. Zuckerberg's first day of testimony, with the stock's strong finish on the day. Interestingly, though, even with Facebook, Apple, and Microsoft as the top point boost for the Nasdaq and the S&P 500, energy was the best sector, up about 3.3%. This reflected a rally in oil, which climbed by more than 3.5%. This as fears around trade tensions between the U.S. and China continued to diminish. Now, among the best performers in that sector and for the S&P 500 overall were Devon Energy and Newfield Exploration, both sharply higher. Also sharply higher and returning to the tech sector was the chip space, up 3.2%, helped by chipmaker NVIDIA on constructive comments by Needham to buy the recent weakness. But even with this big rally for stocks and commodities, Haven bonds were only modestly lower, suggesting that not all investors were buying the dip or the possible longevity of a rebound from last week's declines. In turn, this may just suggest more volatility is ahead for stocks. In New York, Abigail Doolittle, Bloomberg News.
Now, starting with one of the top stories that came overnight, Facebook co-founder Mark Zuckerberg testified before the Senate Judiciary and Commerce Committees about the recent data privacy crisis at the social networking site. Here are the top key takeaways from his testimony.
We didn't take a broad enough view of our responsibility, and that was a big mistake. And it was my mistake. And I'm sorry. I started Facebook, I run it, and I'm responsible for what happens here. We believe that we're going to be investigating many apps, tens of thousands of apps, and if we find any suspicious activity, we're going to conduct a full audit of those apps to understand how they're using their data and if they're doing anything improper.
When you discovered the Cambridge Analytica that had fraudulently obtained all of this information, why didn't you inform those 87 million?
When we learned in 2015 that Cambridge Analytica had bought data from an app developer on Facebook that people had shared it with, we did take action. We took down the app, and we demanded that both the app developer and Cambridge Analytica delete and stop using any data that they had. They told us that they did this. In retrospect, it was clearly a mistake to believe them.
Do you think that you have an ethical obligation to notify 87 million Facebook users?
Senator, when we heard back from Cambridge Analytica that they had told us that they weren't using the data and had deleted it, we considered it a closed case. In retrospect, that was clearly a mistake. We shouldn't have taken their word for it, and we've updated our policies and how we're going to operate the company to make sure that we don't make that mistake again.
Have you or anyone at Facebook been interviewed by the special counsel's office?
Yes.
Have you been interviewed?
I have not.
Well, comments by the heads of state of both China and the US are giving investors hope that a trade war is not as imminent as previously thought. Now, President Xi, of course, spoke yesterday, and his comments raised all of Asia's markets. And later in the day, you had comments from Donald Trump about the comments that were made by Xi early on Tuesday. Tom McKinsey reports on all that's come up.
It seems unlikely. Look, there's certainly relief, and there was relief from the comments from President Trump in relation to this speech from the Chinese leader Xi Jinping at the Boao Forum yesterday. President Trump, as you say, praising Xi and saying that he was thankful that Xi had talked about, for example, tariffs and auto manufacturing and intellectual property. So certainly the rhetoric has cooled between these two sides since this speech by President Xi Jinping. What he did, the Chinese leader, was lay out a package of policies that largely address a number of key concerns from the Trump administration. So, for example, saying that they would reduce tariffs on auto imports, that they would allow foreign manufacturers of autos to increase their equity holdings here in China, that they would lower the barriers to access around the insurance sector, around the financial services sector, that they would bulk up intellectual property oversight, and that they would try to increase the number of imports into China. But none of those policies were new. So really it comes down to now how these are implemented, how quickly they're implemented, what the timescale is, the follow-through. Even the European Commission have said that China has talked the talk and now it's time for them to walk the walk. So it's not just the US who are concerned about these issues. It is also the European Union. Of course, the difference is how the Trump administration is addressing these issues.
So the rhetoric might just have cooled, but Professor Ishwar Prasad of Cornell University says the ball is now in President Trump's court to ease the trade tensions between the US and China. Listen in.
Not a change, but a quite important signal that China is backing off a little bit from retaliation and providing some degree of conciliation in the hope that the U.S. will pick up the olive branch that the Chinese have offered. The $50 billion worth of tariffs that President Trump proposed, the Chinese promised retaliation against that. They did not announce any specific retaliation against $100 billion. And now the Chinese are saying, let's back off a little bit, and we're willing to give in a little. Let's come back to the table. So now the ball is in the Trump administration's court to see if, in fact, they respond positively to the Chinese initiative and come back with a specific offer that the Chinese can respond to.
Well, despite that stellar run for the US stocks overnight, you have the Asian markets that have opened muted in trade today. The Nikkei, in fact, in early trade has been swinging between gains and losses. It's currently just about flat at 0.02% higher. Let's head to the Indian market now, and the trade setup for the day in India. Darshan Mehta and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Darshan, first to you. What's it looking like?
Well, good morning, Alex. If you're looking at what's happening, most of the Asian markets are trading flat. The SGX Nifty has come off the highs of the day. It's trading absolutely flat as it can be. 10,426 is where the SGX Nifty is. So it's absolutely flat in trade. Let's see what happened as far as the ADRs are concerned and how they panned out in trade. So Vedanta was up 5% given the fact that what happened to aluminium prices and the Norsk hydro shutdown that happened yesterday. ICICI Bank continues to gain in further. Dr. Reddy's and Wipro managed to move up in trade also. What didn't do well was HDFC Bank, which was down almost 0.7%, and Tata Motors also looked rather weak. Now, the big move yesterday came in as far as crude is concerned. Just look at the move that's happened as far as crude is concerned. Brent crude is about close to the $71 barrel per mark, and WTI crude is at almost $65.50 barrel per mark. So a big 3.5% move overnight that came in on the crude side. So that is something that was extremely high on the radar. So crude is something that we are watching out for. Let's see what the base metals did. And aluminium continued a good run, another 3% upside post the Rusal sanctions that came in yesterday. Norsk Hydro indicated that there is a capacity curtailment that is happening by 50%, and that actually helped the aluminium prices surge even further. Copper, zinc, nickel led, all of them gaining in trade. Tin was the only one that was down 1.5% in trade. But look at what's happened with China. All the commodities have opened with a positive bias. So copper, zinc, aluminium, as well as steel, all of them are trading with a positive bias. Nothing much happening as far as the precious metals are concerned. What did the fund flows indicate to us? So FI sold in almost 685 crores. DI has bought in a similar amount in the cash market yesterday. Sectors in focus yesterday, the Nifty Bank was up 0.5%. The mid caps and small caps did manage to underperform in trade yesterday. The two sectors in focus yesterday, metal was up 2% given how aluminium has surged, and the real estate pack was up almost 1% in trade. So these two counters will be in focus. The Nifty auto was looking rather weak. It was down almost 0.7%. The Wix also managed to cool off since the Nifty was looking rather strong in trade yesterday. Now, as far as the Nifty is concerned, Nifty was up 23%. The private sector banks contributed the most, ICICI and Axis, but on the other hand, HDFC Bank saw weakness that came in. L&T and Hindalco were the other two counters which managed to move up in trade. But Agam, what are the F&O cues indicating?
Well, Darshan, once again we saw some amount of consolidation. Of course, the Nifty did climb 10,400, but what we've also seen is very little change in OI, considering we haven't seen too much change with respect to the underlying indices. It's the same for the Nifty Bank Index as well. It did move up, essentially on the back of ICICI and Axis Bank, and we did see about 14% addition towards open interest there. But moving in, we really haven't seen too much change in the India Volatility Index because it's largely moving within the range of around 14.5 to around 15. And the put call ratio again edged up higher to 1.47, but nothing too much to speak for. With respect to changes in OI, what we're looking at is a little more writing in the 10,300 and 10,400 puts, and those are the only strikes that stood out in yesterday's day of trade, considering the Nifty moved up and it really hasn't moved too much. Balrampur Chini enters the F&O band, so watch out for that. We'll expect restricted trade there. We have Axis Bank, of course, building on fresh longs after we saw a substantial amount of an up move in the cash markets as well. And of course, the next one that we're tracking is Ramco Cements. Actually, Ramco Cements did see a fresh buying, but I actually wanted to bring out something like Ramco Systems as well, which also moved up as much as nearly 17%. So a bunch of stocks out here that you can keep an eye on, and of course the benchmark indices and how they pan out in trade today.
Absolutely. Thanks so much for that, Agam. Let's now take a quick check on the rupee and the bond market. Saloni Dhanuka is here to tell you all about that. Morning, Saloni.
Good morning, Alex. So, talking about Indian rupee, despite a strong start yesterday, it erased all its initial gains throughout the day. However, the rupee managed to settle marginally in the positive territory yesterday. It ended a tad below the 65 level mark against the US dollar. Well, speaking of the debt market, sovereign bonds yesterday posted its biggest decline in more than 2 months, as state-run banks, which are the biggest holder of government securities, have been net sellers in 6 out of 8 trading days, and hence we have seen yield on the benchmark 10-year benchmark security rising nearly 15 basis points to 7.38%, and remember, yields have risen almost 25 basis points in the last 3 trading sessions. Well, in terms of flows into debt market, global funds reduced their rupee debt holdings yesterday. For the second consecutive session, they reduced their portfolio by nearly 200 crore according to NSDL data. Well, on the global front, dollar index ended mixed yesterday against a majority of its peers. However, it is now trading steady near 89.60 levels. In terms of data, US CPI and FOMC meeting minutes today will likely set the tone for dollar movement in the near term. And elsewhere, pound edged higher against the greenback yesterday after positive comments from the Bank of England committee member that he supported that the bank should not delay raising interest rates again. And lastly, speaking of dollar rupee, it is trading flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade.
All right. Thanks so much for that, Saloni. Shifting focus to the commodity space now, and Jayesh Khilnani is here with all the updates. Jayesh, the big story has to be crude.
Morning, Alex. That's right. This was on the backdrop of the base metals gaining, but in the shadow, even oil prices actually surged more than 6% for this week. So Brent rallied more than 3.5% to close above the highest level since 2014. Now, this is despite the fact that API is likely to report an inventory gain of 1.8 million barrels for last week. Remember that the Bloomberg survey had indicated an inventory decline of about 1.4 million barrels yesterday. Now, what we are picking up from the news aspect is that the trade war concerns have eased after the Chinese president said that a debate would be more likely to resolve the issue that is at hand. And also we understand that Saudi Arabia would like oil prices to be northwards of $80 per barrel in order to support and fund the IPO of Aramco. So that's what we are picking up from the oil space. But coming to the base metal space, the index itself rallied for a second straight day. In fact, 3% gain so far this week. Now, among individual base metals, aluminium was particularly in focus. It rallied once again, about 3% after the near 5% that we saw day before yesterday. This is on the back of the LME placing curbs on aluminium after Rusal also was, under the sanction from the US. As far as other base metals are concerned, we had copper, zinc, and nickel, which gained more than 1% each. In fact, Concord is saying that the copper market is likely to stabilize in the next couple of years. There was only one base metal which ended lower, and that was tin, which closed about 1.5% down. As far as the precious metals are concerned, we are seeing some bit of uptick in gold prices as there has been global tension and investors are becoming nervous and hence buying gold ETFs.
Thanks so much for that, Jayesh. Now, let's turn to the big headline back home, and that is sure to be in focus this morning. Manipal Health has sweetened the offer for Fortis Healthcare's hospitals business, and the new offer stands for 7 days. Darshan Mehta is back to tell you all the details. Darshan, what's a new deal look like, and what does it mean for the shareholders?
See, it's a better proposition than the one that was there last time around because, the last time deal was really a bad deal for Fortis shareholders because they weren't getting anything, and Manipal had managed to squeeze Fortis Healthcare from all sides. It was because of the issues and the concerns raised by the minority shareholders, they had to do this. Now, what is the difference? What happened? Initially, what was happening, this is basically for SRL. So, Manipal was supposed to pay 720 crores for a 20% stake from Fortis Healthcare for stake in SRL, and the balance 30.9% would be actually from the P investor. So this is what Manipal Health would be doing. Now what they're doing is this 20% will not come in. So Fortis is not Manipal is not looking to buy out that 20% stake. So SRL will remain a subsidiary from Fortis Healthcare, but the promoter of Manipal Healthcare in his personal capacity, that is Ranjan Pai, will buy the 30.9% stake instead of Manipal to increase his stake in SRL. So this is the first thing that is happening. So SRL will remain a subsidiary of Fortis. The second one is the fact that post this entire demerger that will happen and the merger that will happen from the hospital business, they are looking at a merger of Fortis, may consider a merger for SRL into Fortis post the entire merger that will happen. So this is the first proposal that is happening. The second proposal was a 3,900 crore infusion by Manipal Health and TPG Capital. Now no such fund infusion will happen. Instead, what they've done is that they have gone in for a rights issue. So the third one is the fact that initially there was no rights issue. Now there is a rights issue of 4,000 crores, which will be open to shareholders of Manipal Health as well as Fortis Healthcare. So in the combined entity, the Fortis shareholders have an opportunity to up their stake via this rights issue that is coming in. And finally, Fortis valuation has been increased by 21%. So initially it was 5,003 crores. Now it's been valued at 6,061 crores at par with what Manipal Health has. So initially a larger hospital Fortis was valued at a much lower scale in the entire scheme of events. Now it's pretty much a 50-50 scheme that's happening for the entire deal. Now what is it? Why is it better for Fortis shareholders? First of all, a 21% higher valuation for the hospital business. So both Manipal and Fortis will have equal valuations in it. Higher stake in the merged entity via the rights issue. So once the rights issue comes in, Fortis shareholders again will have, money or the capacity to increase their stake in the merged entity, and probably because of the deal that they have structured with SRL. SRL will remain a subsidiary of Fortis Healthcare. It will not, Fortis will not only be a holding company of it. So there is a possible future listing of SRL which could create value for Fortis shareholders. No doubt it's not the best deal that Manipal could offer, but it's certainly a better deal than what it gave last time around.
All right. Clearly a stock that we'll have to watch out for in trade, Darshan. Thanks so much for that. Let's turn to the other stocks that you have to pay attention to in trade on account of them being in the news. Shraddha Babla is here to tell you about the stocks in news. Shraddha, morning.
Good morning, Alex. Starting off with this Mahanagar Gas, which will be in focus. This is as its promoter BG Asia Pacific Holdings is looking to offload about 7.5% stake in a block deal today. In fact, they also have a green shoe option to sell an additional 5% stake. The floor price for which has been set at 905, which is a 4.2% discount to yesterday's closing price. We might actually see some negative reaction there. That apart, Canada Pension Fund has invested additional 938 crores in the strategic investment platform that it had built with the Phoenix Mills unit. With this second tranche of investment, Canada Pension Fund's stake in that investment platform will now rise to 49%, and this additional funding will allow them to undertake new developments and acquisitions. So watch out for the Phoenix Mills. You have Lemon Tree, which has inked a contract to operate a 120-room hotel in Vijayawada, and that hotel is expected to be operational by March 2021. This recently listed company, watch out for this name as well. You have Himachal Futuristic, which is won orders worth 579 crores. You see some positive reaction there. Star Cement, a smaller company, they've said they've received about 80 crores towards subsidies from the central government, and that they will use that for prepayment of loans. So positive development there as well. You have Oricon Enterprises, which has said they have partnered with the unit of Indiabulls Real Estate for joint development of a property in Worli, and post these definitive agreements, Oricon will get exclusive ownership rights of 1.1 lakh square feet leasable area. So again, positive development for this one as well. And lastly, on the back of bulk deals, there is Supreme Industries, where small cap world funds sold 1.4% stake yesterday. They held about 4.4% stake as of 31st December. So partial stake sell coming in there, Alex.
Thanks so much for that, Shraddha. Let's move on to the big brokerage calls of the day, and Somit Sarkar is standing by to tell you about a couple of them. Morning, Somit.
Good morning, Alex. On the big brokerage calls for the day, first we have is HSBC on sale. Now they have raised the rating on the stock to hold from sell and have hiked the target price to 88 from 84. Now, according to the brokerage, the fourth quarter of financial year 2018 is expected to be another strong quarter for the company on the back of demand recovery and benign pricing environment. Now, the completion of modernization and expansion of its projects is expected to improve the profitability for the company. The brokerage is also saying that the company's major plans are now profitable, at least at the EBIT level. That is also expecting an average volume growth of around 11% and EBITDA growth of around 46% over FY19 to FY20 for the company. It is also expecting sale to return sale to become profitable in financial year 2019 for the first time in the last 4 years. Lastly, it says that lower margins compared to peers and inefficient capital allocation remains a concern when it comes to sale. Second, we have is Edelweiss on Future Consumer. Now they have initiated a buy rating on the stock and with the target price of 77. Now, according to the brokerage, Future Consumer is a long-term play on India's evolving consumption segment. The company has been efficiently leveraging Future Retail's strong store base and has also been tapping emerging categories with innovative product offerings. And the brokerage also says that the differentiated and prudent pricing strategy of the company is ensuring desired traction for the company's product. Now, the brokerage is expecting the company's revenue to grow at a compounded annual growth rate of 42% over FY17 to FY20, and over the same period is expecting the EBITDA margins to expand by around 379 basis points. It is also expecting the company to turn profitable in financial year 2019. Lastly, it says that robust innovation drive, expansion in retail footprint, operating efficiencies and favorable product mix are the positive when it comes to Future Consumer.
Thanks so much for that, Somit. Well, bullish call there on Future Consumer. Let's move on to some other stories that you can find on the website bloombergquint.com. First up, the government has withdrawn its preliminary information memorandum for the proposed divestment of helicopter services provider Pawan Hans due to muted demand. Bankers have told a parliamentary panel that the central bank's February 12 circular revising the debt restructuring framework is too stringent as it triggers a resolution plan within a day of default. Markets regulator SEBI has released a detailed framework in order to identify and verify beneficial owners of foreign portfolio investors. A beneficial owner, remember, is a person who ultimately owns or controls an FPI. Now, in a big push for electric mobility, India's most powerful electric engine was commissioned yesterday. The 12,000 horsepower high-speed train is the first Make in India project of this magnitude completed along with French rolling stock giant Alstom. Here's a special report. Well, that looks promising and it's a lot to think about. I'm going to do just that. Do stay tuned to Bloomberg Quinto. Up next is All You Need to Know.